The stock market has just broken out of a coiling range, and it's done so in the month of October. But what does this mean for us as traders and investors? In today's video, we take a look at the dark pool activity, the gamma squeezes going on, and the new opportunities on the horizon. With major sectors starting to break out and other markets starting to crash, where will we be sitting in terms of the end of the year? In today's video, we take a look and we more importantly break down the data that is really surrounding these markets into inflation figures and, of course, this series of earnings season. It's going to be a big one, guys. Join us. We'll see you in a moment. Well, welcome back, everybody, to The Daily Show, where we discuss markets around the world, including stocks, commodities, and cryptos. My name is Tom, and in today's video, we'll break down everything that you need to know about the last 24 hours, and more importantly, the upcoming weeks and months. But let's get started with the new all-time high. We broke the coil range, and as we suspected based on the wicks of the S&P 500, if we were to break this range, we would see most likely a gamma squeeze to the next level. That worked pretty much perfectly. Now let's talk about what this means though for the month of October, and more importantly, the next 3 months leading into the end of the year. Well, the good news for the bulls is now we have some stats for October, which is a new all-time high. It's not that common, and when it does tend to occur, 75% of the time, the month is actually up overall. More importantly, though, the Q4 area is 90% up overall, and this is another one of those stats that banks into the possibility of a soft landing narrative. In fact, we have a chart coming up soon that actually talks about the average length to recessions and whether we are in the soft landing narrative. Now, as most of us know, Octobers tend to be weak. We talked about September being a possible turn month, especially in the last 2 weeks, and it didn't end up eventuating. Obviously, the price action takes control of the data, and in this case, we know most people are calling for October to be negative. And as we've shared before, we don't really need to be too concerned leading into the election about necessarily an absolute collapse of markets occurring, and whatever they were going to be, it was probably going to be a buy the dip. But still keep that in the back of your mind because, yeah, October can still get volatile, and we know that the VIX structure, the volatility structure in the markets, that is quite bearish at the moment. Of course, people are still really starting to set up a lot of put protection and things for a potential event to occur. Now, we do know that people like Fundstrat have been bringing out some data, and that's actually shown that only Octobers in these similar situations will be up 22% of the time. Well, in many ways, that's been debunked over the last 24 hours with the new all-time high really breaking this down to basically saying, well, wait a second, now we're at a 75% likelihood of an October bullishness. Does it change November into December? Not at all. They tend to be quite bullish across the board, and as we know, this could really lead into a bit of euphoria in markets. Now, what if October was bearish? Well, as we've said before, even if it was bearish, it still bodes very well. The market structure coming into October was very bullish. The first 9 months of the year overall, a 21% return. And whenever you see markets do this, you might think, well, it's got to go down. Well, as you can see here, in similar situations, that's not exactly how it went. And markets tended to feed upon themselves. And especially in this one where the Federal Reserve has, of course, brought a bit of stimulus back into the market, things tend to be leading well. So then the next question is, are we in a recession? Or are we in the no landing scenario? The no landing scenario obviously having some great stats behind it, while the bonds market is saying the no landing scenario is most likely. Why? There's no fear in this market right now. Now, of course, this will change throughout the next year, and of course, we'd love to see you follow on this channel because we believe 2025 into 26 are going to be blockbuster years for traders and investors with some serious gains to be made on both sides. But most of the good indicators that are showing right now are pretty much this euphoria, great kind of Goldilocks style situation. Just take a look at some of the best reads here. We've got the ISPO for high yield index coming to new lows. That's obviously a relatively bullish sign. We've got cyclical to offensive ratio actually making a new high. Again, a pretty bullish sign. Boom bust barometers going back into the boom. Economic surprise index going up. And of course, all this is happening while most surveys that I've seen out there have said that the economy hasn't been this bad for such a long time. It's effectively climbing the wall of worry. Now, this chart's a bit all over the place, but what it shows you is it kind of goes through the idea of how long it usually takes for a recession to show up during the first rate hiking cycle of the Federal Reserve to the last rate hike cycle of the Federal Reserve. And you'll notice now that we're getting past a couple of months. In fact, if we were to go with the first hike to usually where a recession would be, that would have been this year in June. If we were looking at last hike into a recession, generally that would have been April. And of course, the first rate cut, usually it takes around 3 months until the markets overall kind of freak out. Now, that's why we talk about the structure for the first 3 months, because generally speaking, if you look at especially a lot of the last ones, it's had a bit of a lag effect where markets have done better. Then 3 months later, we've ended up into a recession. This time around, the structure coming in looks pretty good. And this comes back to what the Federal Reserve is doing. If we actually take a look here at what the Federal Reserve released in their meeting minutes, it basically said some participants noted that there had been a plausible case to just do 25 basis point cut at the previous meeting. It's my opinion anyway that the Federal Reserve basically were just trying to say, you can't predict what we're doing, but guess what? We're here and we're going to do whatever it takes to make this market do very, very nicely. That's what the 50 basis points kind of came out and obviously told the market. They said, you know that we probably should have done 25, but we did 50 because you can't predict what we're going to do, but we're going to do whatever it takes. And maybe that made it more potent in some ways. And that's why the market's, of course, been reacting positively towards this. They've got a great confidence that they're moving sustainably towards 2% inflation. I don't know if that's going to play out. I think 2025 could be a reflation year, which, of course, is a scenario that we could trade off. And of course, as in general, most of the committee ended up saying, yes, we're fine with the 50 basis point cut, etc. Some breaking from those ranks, though, and saying 25 would have been more appropriate. As we know, it's really now about the next cuts. Will we continue to get 50 basis point cuts or get 25 basis points? In a 25 basis point slower cycle, that tends to add a lot of boost to the markets. We could see certain market sectors, such as the Russell 2000, start to really play out back in maybe after the election into 2025. I think it's going to be a very exciting point for that particular market sector. And we may even see deregulation come back in as well, depending on who wins the election. Either way, this week is the kickoff of course, big earnings and inflation figures. So reinflation could even show up straight away. I don't think it will, but if it does, CPI event on Thursday. Remember, guys, not only is this the Tesla event day, this is a 1% move day. So it's going to be a little bit volatile over the next 24 hours. Then we get JP Morgan and, of course, Wells Fargo giving us their kind of results of the markets. And we'll see in a moment what that tends to do overall to the earnings season, because you might be surprised how decent earnings actually is, because Wall Street often lower their valuations, lower what they expect, and then they say, oh, we got a beat, and then the market, tends to do one thing. Now, this is an interesting chart here from Jason Gottfried, basically about the ADX. And basically this shows that whenever we get down to these kind of weakness levels, we tend to see a big move. Now, you might say, well, look at this chart. Sometimes we get down to these levels and we see negative moves. Absolutely. Sometimes we've seen positive moves. Sometimes we've seen super negative moves off these low levels. But one thing's for sure, we see big moves. And that could be what's in store for Bitcoin. It's been sitting for a while. A lot of people are saying ETFs were the end of this market. I don't think it is. Of course, we're talking about the chance of the next 3 months being relatively positive for Bitcoin. But this is just another sign of something is going to awaken soon. And we need to see the market probably trap everyone before that occurs. And that's what we'll be looking for in the markets over the next month. Now let's talk earnings. We know it's JP Morgan and Wells Fargo that kick it off. We also know that on average, and we posted this over on our X account, so follow in the links in the description down below, on average, 2% is actually what we tend to see the markets do over the first 4 weeks of any earnings season. Now, while that may not hold true for this one, we'll see, obviously Q2 wasn't like that. This is a great stat to keep in the back of your mind in the future. Generally speaking, the S&P 500 rises over the first 4 weeks of reporting. Now, when you think about that and you go through all of history and then you keep that kind of bullish narrative in mind, it can help you to gain a little bit of solid bias on good setups, because guess what earnings does? It creates fear in most people's emotions and mind. And this is just another one of those stats like I talk about when it comes to the markets, that if you were to flip a coin on the S&P 500, generally speaking, it's actually not a flip of coin. It's almost always statistically more bullish than bearish. And that actually gives you, again, a bias that can be quite good in most times. Now, we believe on the channel that back end of 2025 and 26 become less clear. We actually did a talk yesterday in Australia here in Melbourne where I went through some of the concepts of 2025. It was great to meet so many of you out there. By the way, if you're in Sydney, make sure to click on the links in the description down below. Come to the Sydney event. It was not to be missed for sure. But let's go through some dark pool activity. MSTR MicroStrategy Incorporated. Big trades here. Lots of accumulation, or what looks like accumulation occurring over the last couple of months. And now we're seeing a potential breakout. Now, a lot of you guys like MSTR. I don't particularly like it or dislike it, whatever. It's just what it is. And we saw a lot of selling over here. And now we've seen a lot of what looks like accumulation with the big breakout. Big trades coming in. Possibly this thing's getting ready to go. Soxal also having some massive trades on it recently, as we've mentioned. Semiconductors getting big trades. But we did just see Soxal show another huge trade after a bit of a move up. So what does this mean? Does this mean someone bought it and then instantly sold it and took profit? I would have to guess that's probably true, because that is a dark pool activity trade here. They've taken a little sneaky dollar. Maybe they've reduced it. It could also be additionals, but generally when you see them placed so quickly together, that can be a quick scalp / day trade type of setup. Let's go through the last 5 days. Semiconductors number 1, technology number 2. This looks like it's getting ready to lead again. And then, of course, the rest of the market comes in after. As we know on this channel, we cover so many markets because we want to look at flows. But really, the most important thing is look how we switched last week or the last 2 weeks on gold, but last week from utilities being bullish to bearish. Take a look at this. Last 5 days, super bearish, down 3.28%. You could have been bearish on utilities, bullish on the market, and actually been making spread money. And in this case, utilities is just a classic case of everybody piling in. Remember, on the channel, we've been very bullish on utilities this year, but then we switched. And just like that, they start to go down. They're certainly in down to consolidation at this stage. Same thing with gold, too many people covering it. Solar is also an interesting component because, of course, that's considered one of the Democrats' kind of potential winning type of trades. And that's been getting thrashed the last couple of days as poll results tighten in quite a lot into this US election. It's anyone's game at this stage. Let's now move over to what's been going on in the daily. Not really anything here to report other than the standard things were down. And, of course, we saw semis continuing to go up. Also, healthcare breaking out there. But let's go to the S&P. That's a pretty decent movement. We saw it break out of 5760, go into positive gamma, and move straight towards the 5800. It's pretty much exactly what we expected for it to occur. That 40-point move is pretty much a day trader momentum kind of move. And as we kind of suspected over the last 24 hours, this was where we were going to reach. Now, what's important for the bears to understand now is that we know exactly where the bears get control of this market now. It's going to be under 5674. Unless the market's under that, the bears are not in control. The bulls are in full control. And what changed over the last couple of days was realistically these wicks. These wicks showed us that there was some form of buyer here. And that, of course, led us to believe there was more chance of an upward break than a downward one. And that's why we lead ourselves into this point. Does that mean that October's over and cancelled from selling? No, we still think this is definitely a possibility. 5600, 5620 is a possibility. But you've got to put it in the perspective of it's not that much sell-off. It's like, 3%, something like that. And that's the standard type of thing. 3 to 5% is really all you usually get. And then a couple of times a year, you get between that 7 to 10, maybe even upwards of 15% off on markets if they are in a bullish regime. Let's now take a look at the gamma event of the next 24 hours. Yeah, 5795 to 5800 is a huge level in these markets. And if we're able to break through it, we go into significant positive gamma. This is now the core wall level. And of course, inflation numbers will be the big decider here. A bear may want to try to have an attack on this zone. But remember, if this level gets taken and it holds up, it's probably going to start feeding upon itself. And the reason is when you look at the next couple of sessions, the options market is full in basically positive gamma. Have a look at all these calls across the board. 5700 into 5800, into 5850, into even 5900 in the future. And 5800 is now becoming the big strike into October. So this is the thing. We're getting a huge amount of bulls trying to push this market through. And if we're able to take this due to some favorable statistical figure coming out from banks or maybe even CPI, the markets look like they're kind of ripping again, led potentially by technology and semiconductors, which we know is not a bad sign. Remember, if you miss things, don't worry, because Russell 2000 will lag and then it will come through later on. There's always another opportunity in these markets, guys. The abundance mindset. We've seen so many over the last 2-3 months together. We were buying NVDA at like $94. We were seeing huge structural zones. And of course, when everyone else had fear, we have been generally very bullish across the board. We shared some bearish stats towards the back end of September, but none of them eventuated with good price action. And that's the key. The price action must come along with it. Let's now move to Tesla, 10-10 event coming through. Ultimately, this is just a fight between 240 and 250. Get past 250, move to 260, get past 260, possibly even up to 280, even 300 on the cards. NVIDIA struggling with the 135 strike. You can see here if it keeps holding up for the week, though, that is in positive gamma territory. So in general, NVIDIA is more bullish than bearish on the current charts and, of course, what people are talking about. Let's now move over to our reads here. As we mentioned, in general, the bonds market's not freaking out. Last couple of days, a little bit of an uptick in bonds, kind of speculation towards potential downside. Not enough to go off just yet. High yield junk obviously dropping, mostly because of yields going up across the board. And the US dollar has gone up because, of course, less cuts have now been expected due to the strong jobs number. This may change, but what a great trade. Congrats to anyone in the US dollar. This is an absolute fantastic level. And just before the CPI, we hit this key resistance. Another banger trade, another great position. Again, just showing that flow going through these markets at this stage. So that's kind of hit the resistance. And for day traders and scalpers and swings, they're going to be probably looking for the next big move. We'll check that out over the next 24 hours. Copper, is it low enough yet? Probably not. This is kind of showing that maybe China has further sell-off. I would suspect that China is going to do something like this, and copper will follow the same type of path. Looking for a 432, ideally finding structure. We'll keep following that in the future. Gold falling off, totally normal. Again, became saturated. Too many people, gold, 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 gold. It needs to have this pullback in time correction. We're looking for 25.60 at the moment. The sell is still working. What about silver? Well, silver is double-pronged. It's in a key level to see turns. Still not enough structure yet. We'll again cover this when it needs to be covered, but that's what we're updating there on silver. And then there was oil. Now, oil actually came back to one of the key areas. So oil got crushed. We expected that off the level of resistance. It's been pretty easy trading actually here on oil. And now we're going to see whether it gets through 74.50. If it does, I think that's a good second potential burst up towards oil. And remember, there is still a lot of conflict in the world, which is incredibly unfortunate. So this one could spike at any time based on that news. But 74.50 is a level to be watched. Let's move over to Tesla, stuck in a coil ahead of the 10-10 event. It'll be what it'll be. It's basically going to be a news/gamma event. And NVIDIA broke through and, of course, is currently looking to hold above 130 for the week. Now, I'd love to see a 134, 135 kind of close up high. That signifies that pullbacks should be met by bull demand. And I think NVIDIA is looking a lot better on the charts. We'll see how the week ends for that. And semiconductors still have a bit of play to go. So semiconductors lagging behind NVIDIA. NVIDIA leading. Semis are now trading at a bit of a differential to it. So again, what about if we get past 257? That could be quite bullish for it. As we mentioned, there are always tails in the market of bulls and bears, and utilities was the bear side. Another great day to be a bear. It just shows you can be both. And we're looking at the moment to get back to the weekly 20 moving average. Mean reversion would be sweet. And that actually should coincide a little bit with about 76. So we'd like to see a 76 online for utilities. Still bullish on it over the medium long term, but liking this pullback. Again, there are bulls and there are bears. Same thing with China. We expected the crash. Now, it didn't quite get back to the 61.8 fib straight away. I would kind of think that China is going to play like this and then do that later on. Now, the reason why I think that it's going to be like this is because it's going to be looking for more stim packages. We didn't see enough out of China yet. We just think that this is probably a turning point. So, of course, everyone got hyped up, trapped some people, buy the dip comes through, everyone thinks it's all great, and then probably a turn into the downside. I think China's going to be one we have to watch a lot for now, but structure guys will be looking at this and saying, well, things are starting to improve on the smaller timeframes, and maybe we're going to see a little bit of movement towards the upside for the short term. Let's move over to the Russell 2000, still flagging. As you can see here, we've got the flag component, still consolidating, potential for the upside. If you're looking at small structure here on the Russell and you're saying, well, have we seen enough bullishness come through? Yeah, kind of on the small time frames. This kind of is structural base, and in many ways, it's found a little bit of buyers. Now, if the CPI number is good for the market goes even more positive gamma, and obviously the S&P starts moving. The Russell is trading right around that range where some day traders are going to say, well, I think this is not bad, and I'm going to try to buy it with a stop below the low. It's pretty much like almost a coin flip, but of course, if the benefit of the gains does come through, then you're going to be looking at a better than one-to-one risk reward. You make your own decisions, obviously, but it's an interesting structural zone, and you'll notice that it's coming in with dojis. And what that means is the market's happy with where it's at. It's not necessarily bullish or bearish. It's in equilibrium. But I can see some more bull signs at this level than bear for now. What about the Nasdaq? Well, the market's moving up to the second major res. It looks like it's going to try to go for that. That's at 20,400, and that's a level we've had for a while. Then we move over to Bitcoin. Now, Bitcoin, of course, has a bullish and bearish stance on it. Uptober cancelled for now. We know this is where the bears sit. We know this is where the bulls sit. The bulls will also sit at 58K. I'm thinking Bitcoin has some kind of wipeout on it, potentially, before it really tries to go up. Still bullish overall on the multi-months here. But as we saw before, we're definitely at an inflection point for a large move to happen on Bitcoin. That ADX stuff is certainly very compelling when it comes to a huge move coming. There's a coil, and when it breaks, it's going to be absolutely ballistic either way. So I'm looking forward to seeing that in the crypto markets. As we mentioned, core CPI and CPI numbers are coming. This is where people will kind of be watching for inflation numbers. And then, of course, we have PPI on Friday as well, which can move the markets. The big story, though, will be JP Morgan and Wells Fargo. And as we know, Wall Street's been downgrading, so they can say, oh, we've got beats. We've got beats, guys. Everything's fantastic. October is still going to be one of the most interesting months of the year. As always, guys, if you enjoyed today's content, please remember to subscribe, smash that like button, and of course, check out some of our courses if you're interested. And if you're from Sydney, subscribe to the event, 30th of October. I also want to just take this time to wish everyone of our community that is either got family members or, of course, affected by these horrible storms in Florida. We wish you, of course, safety for you and your families and friends. And I hope no one is too horribly affected. It's brutal what I'm seeing from here in Australia. Obviously, it's on the news everywhere in the world. And I believe it's all happening now. So I hope everyone's safe and sound. And I know people in the comments down below, send your well wishes to everyone in the community that's in those affected areas. Thanks, guys. And you have a good day. Bye for now.